Good morning, Paul Georgie from Allendale. It's June 21st, the longest day of the year. It's Thursday morning, and we just had the release of the weekly export numbers. Corn trade was looking for 450 to 650, came in 382, well below the range of estimates. Soybeans 700 to 950 was the estimate, 608. And wheat, 300 to 500, came in at 842. So we had excellent wheat exports last week with weak corn and soybean numbers. After this report, we did see the wheat market firm up a little bit from where it had been trading before the report. Markets are lower this morning. Profit taking, I think, would be the easiest way to describe it. We've got some pressure from outside markets. We've got crude oil down here this morning. It traded below the $80 level in the August contract, and since has bounced back a little bit. But the CRB index, giving us an idea of what the basket of commodities are trading like, is down another 100 points today. That's puts it down about 600 points from Tuesday's close. So some weakness there, and that kind of pressure is continuing or weighing on the grain markets here this morning. Weather forecast is still the major focus of the trade. Rain system moving across the northwestern corn belt, northwestern Midwest, giving some good amounts, but since has dissipated, and very light amounts in our area here near Chicago. They're calling for a slight chance of rain. So our next chance appears to be on a Monday, Tuesday time frame. So the good part of it is temperatures will be cooling off some, but dry conditions are going to persist throughout the Midwest. And also another reason for some weakness here is that the 6 to 10 day forecast has added a little moisture. The 10 to 15 day forecast has put a little more moisture in. And when I say little, it's going from 0.3 to a half an inch, 35% to 40% coverage. Certainly not a drought buster by any stretch of the imagination. We did get some positive news overnight out of China. The Chinese government says they are going to end their probe on anti-dumping probe for U.S. DDGs, which opens the door for more exports of DDGs to China. South American corn continues to be cheaper than the U.S., and that's probably a reason why we're seeing these weekly export numbers go down, is because the South American corn is definitely a financial advantage to purchasers. So they're buying corn out of South America at this point in time. We did get some poor PMI numbers out of China overnight, showing that the economy is continuing to slow there. However, a little support coming out of the EU is that the Spanish debt auctions are going well, and that is providing a bit of a support to the euro. But the macro markets in general are fairly quiet here this morning. The dollar's down just slightly, and the euro up slightly. The option expiration is coming up here tomorrow. That will be a focus, as the largest open interest right now is at the $6 strikes. So will the futures migrate to that level? Or are we going to stay strong here going into that expiration tomorrow at the close? In the livestock markets, we've got cattle on feed report out tomorrow. The trade averages are on feed 106, placed 113, and marketed 105. The key number there is that placement number at 113 seems to be relatively high. However, the dry pasture conditions that we've seen, and the drought conditions in still Oklahoma, Missouri, Texas area is providing a reason for cattle feeders and cattle producers to put this cattle in the feedlot rather than try to raise them out on the open range. We've also got news out of the chick placements. There were down 2% and down 1% in broiler sets, so that's an indication that they're may be improving, but I think the reality there is these numbers are being compared against a year ago numbers that showed some decline already. So we're still reducing poultry production, but maybe not at the pace that we were a year ago. Choice beef up 6, select down 81, pork cutouts were down 39. The pork market still is overbought and may give us a reason here to set back a little bit, but tight hog supplies is certainly supporting the nearby hog complex at this time. So stay in touch with Allendale's research. Get signed up for our Ag Leaders webinar on the 26th and next Tuesday at 8 p.m. And you can sign up right on the website. We certainly like to have you. We'll get some questions answered about the weather and about price projections. Rich Nelson and Drew Lerner will be presenters at this month's Ag Leaders meeting. So we wish everybody a very successful trading day, and I will talk to you tomorrow morning.